In a turn of events, Donald Trump is making China stocks great again because the Chinese government is stepping up their stimulus measures with Donald Trump's trade war coming in fiercely. So is it time to buy Chinese stocks? Especially when you see the picture on the left that the China's terrific 10 stocks have performed tremendously well while the US market is actually crashing nowadays. In this video, I'm going to share my top picks based on my own personal experiences. So let's dive into the video right now. But before that, if you're interested in US, China, or Singapore stocks, then you should join our free weekly newsletter with over 9,000 plus subscribers. Just click on the link down below to join our community today. With that, let's get back to the video. Why should you consider China or Hong Kong stocks right now? The reason is simple. Okay, we have four reasons actually. So first of all, economic growth. China's economy is still growing at a healthy 5%, even though it has come down by a bit, quite a bit from in the past decade or so. If you compare it to US economy is growing at 1 plus percent. So China is moving at a much faster pace. Second thing, attractive valuations. If you were to compare all the Chinese big tech companies versus the US tech companies, you will see a very wide or disparity or gap in valuations. All right, so case in point over here, I've pulled out how Tesla is trading at 100 times P ratio even after the 50% drop in share price recently due to all the big hoo-ha about Elon Musk, how he's focusing on the government instead of his companies and things like that. And when we compare it to BYD is trading at 30 times P ratio and they have already become the largest EV maker. So in Singapore itself, I do see a lot of BYD cars driving around. Even ComfortDelGro, they are also using BYD cars, right? If you were to take notice. So in a way, you know, you are already losing market share to BYD and you're still trading three times more expensive than BYD. So, I mean, there are a lot of optionalities in Tesla, like for their robotics and things like that. But that is another story or another topic that we will not discuss today. But basically, the point is here that China stocks are much more attractively valued as compared to the US counterparts. The third point, government support. So while we do say that a lot of governments are supporting their countries and things like that, and Donald Trump is making America great again, when it comes to the Chinese government, they are in a way because President Xi Jinping have the what you call that, the total say, okay, or very fast paced way of doing things, such that when they want to implement any kind of measures or policies, it gets passed down straight away. Okay, so there's no like a debate going on in US and things like that. It has always been the case. Um, and the Chinese government is passing on all these stimulus measures because they are in preparation for the tax tariffs that are being imposed on them from the US. So instead of like US crippling China, is instead is indirectly causing them to focus more on themselves, domestic consumption and stuff like that, and it's beginning to show positive effects. All right. And the last part is, of course, portfolio diversification. So, like just now, when I talk about the valuations part, right? So, if you were to think from a investor standpoint, if you have been very heavily invested into US stocks and you see that, maybe the China market can also offer you some kind of global exposure for a well balanced portfolio, why not? Right? You can diversify your portfolio through US, China as well as Singapore stocks. So there's no saying that you have to go all in into US stocks because they are international. So if you take a look at Tencent nowadays, they are investing in so many different smaller gaming companies that I myself are playing Supercell games, which is under Tencent. So I mean, all in all, China's stocks are getting bigger and bigger. We have Alibaba, Taobao, and things like that. Right. So they are right now at a lower valuations compared to the US, and I think that it is a good time to maybe pay attention to China Hong Kong stocks. Okay, first stock that we have, Alibaba. As you can see from the picture over here, Alibaba has so many divisions. First of all, AliExpress, okay, Lazada, we are familiar with this, is operating in Singapore. But on top of that, they have Ant Group, okay, which have Alipay. They have Cainiao, which have all those robotics, AI robotics that are delivering their goods from the warehouse all the way to all over the world. Of course, we also have Taobao. Okay, Taobao is the one that I do have a personal experience with because my wife used to buy a lot of items from Taobao and ship over to our house directly. So we skip over Shopee, we skip over the retail outlets and go straight to the Chinese manufacturers through Taobao. And I always feel that it's a very good experience, just on my end lah, because you can buy things, good quality stuff at very low prices because you skip all the middlemen. Okay, but one thing that you have to bear in mind is that there are also some cases where things don't turn out so well. But all in all, I think like maybe out of 10 purchases, maybe 7 or 8 of them are good enough, and that really saves us a lot of money. And the last part is Alibaba Cloud. Okay, from what I hear from the news that I've read, Alibaba is offering the cloud services on the chip to all the Chinese merchants using them in a bid to gain market share. And I think this is very important because Alibaba do have huge cash reserves. They are able to go for the long game. So if they are able to secure a lot of merchant customers from the onset, in future it may pay off very well. Okay, so that is talking about my personal experience. So when you talk about the economic mode and referring back to all these divisions, right, I do feel that they have a very dominant e-commerce platforms in China itself. So they do have a very powerful network effects. Although you may say that they are in strong competition with Pinduoduo lah, with TikTok shopping coming up and things like that. But I do like how all this is churning out free cash flow where they can um, then pump into the rapidly growing cloud business, especially with AI growing so quickly. You do need the cloud computing division to go and support this rapid growth in the AI space. Okay, so that will really provide a lot of value going forward. And talking about AI, so Alibaba is aggressively investing in AI. So this will really drive them going forward. And I do see that Alibaba Cloud is already in existence in Singapore. So I do believe that they are gonna expand internationally going forward. Lazada is one very good example, although it hasn't done really well compared to Shopee, right? But Alibaba is not just like a pure China play. They do have a lot of potential to expand internationally, and that will really trigger the growth going forward. Okay, the second stock that we have, Meituan Dianping or Meituan lah in short. Okay, Again, these three pointers. First one, personal experience. So I have friends and relatives who have visited China and they are raving about how fast and how cheap it is to get delivery. So in fact, like when they go to China, they simply just stay in the hotel rooms and they will deliver right up to your hotel room door. That is so crazy. And they have all been very wowed by the experience. So this is by no means and not an easy feat. This is because of Meituan's massive rider fleet that makes them the undisputed local services provider. Okay, so they are already the leader in this kind of food delivery. And from what I've read, Meituan is also expanding this into the Middle East, if I'm not wrong. So they are not just based, they are very big in China, yes, but they are also expanding internationally. Okay, and let's talk about the economic mode first. So with so many delivery riders forming this kind of a very extensive network, right? It does form very significant barriers for competitors. So far, the other one that have food delivery services that are doing well is by Alibaba, which is Alimi. Okay, so imagine China has 1 billion population, and there are only two delivery providers in China itself. That is kind of crazy, right? If you think about it that way. On top of that, they have this data-driven logistics, right? So when they get all this data, right, they are able to get to use your data for multiple services, which brings me to the growth opportunities because of these food delivery services, which even maybe not doing so well. It's okay because when they get all this user data, they can then expand into complementary services like grocery delivery, bike sharing, hotel bookings, and so on and so forth. So their money don't just come from one food delivery service. They can actually use that to expand into different complementary service offerings. And because of the consumer shift towards this kind of convenience, like what my family and friends do, right? Very convenient, so they just order. So as more and more people get you know suck up or like intertwine with this kind of digital convenience, it will create the kind of habits that will really make it like a recurring business model as opposed to just a one time off. They know that people are used to this kind of convenience. In China it's so stressful, it's 996, so you definitely need this kind of delivery services, and that will benefit their business model lah. So it's like a very positive network effect. Okay, the third stock that we have, Tencent Holdings, one of the most recognizable stock in China itself. Because why? Because of their WeChat. Everybody that go to China, you need to have WeChat to act as the default WhatsApp. So that is how dominant they are in the whole of China. And with this super app, right, it's like it's China's communication backbone, and on top of that, it's basically used for everything from your messaging to your payments to your mini games. WeChat is phenomenal, and this is, if you want to talk about economic mode, this is like a perfect economic mode. It is impossible to debunk. All right. Second thing, gaming portfolio. Again, this is for my personal experience. I play Supercell games, Clash Royale, Clash of Clans. If you are also a player, let me know in the comments down below. And on top of that, my son loves Pokemon Unite. We even play with each other, right? I use my handphone, he use iPad. And Pokemon Unite is actually also by a gaming company that is partnering Tencent. So if when you load the game, right, you see at the front part there is Tencent actually, Tencent Games. All right, so all these kind of games are all under Tencent Games. So again, very incredible, right? So how they diversify internationally through acquisition of the different stakes in the different companies under a division called Tencent Games. The last part is financial performance. Okay, so we pivot a bit. We talk about their financial performance, and it's been really spectacular as well. So it has been growing their revenue steadily over the past years across diverse streams, and they are not like a startup where you are losing money trying to gain market share, but they already have the market share. They are the dominant players. They have healthy profit margins and robust cash flows that enable them to continue reinvest, pump into more companies, pump into maybe a new AI startup, for example, and continue to grow their entire company going forward. Okay, the fourth stock on our list is none other than Super High International. So why this stock? Let me just share some background for context first. Initially, Haidilao was together, right? So when they expanded to other countries, they are branded under one Haidilao, which is listed in Hong Kong. However, because they decided to split up, and Super High was born. So Super High was their international arm that is, um, you know, earmarked to expand into international markets like Singapore, US, Australia, and so on and so forth. Okay, and why do I pick Super High instead of the China Hai Di Lao? The reason is very simple, because I want to um, when I visit the Hai Di Lao in Singapore, I'm actually looking at this particular company, right? Super High. I'm not looking at the China one. So if I were to make any judgment based on what my personal experience is like, I would want to focus on the international arm. Okay, and talking about the personal experience, so I do celebrate my daughter's birthday at Hai Di Lao Singapore every year. Okay, so it has become like a routine, and we even have Hai Di Lao memberships. Okay, so every time when there's an important occasion, we will go there to celebrate. We will have them. We really like the kind of kind gesture where they send us the cake or even a plate of fruits and somebody singing the song for you. You don't get this experience, this excellent customer service elsewhere, right? Not in Beauty in the Pot, not in other hot pot restaurants, heck, not even like maybe in Swenson's or things like that. So basically, if you were to talk about just the customer experience, the feeling, right? Only Haidilao is able to give such a wonderful experience. Okay, so which I talk about here on the second point. So the staff sing for you, you get free goodies. That is an experience that no other F&B outlet can match. So it really sinks in well for me, such that I do feel that they have an economic mode with just this excellent customer service as well as the membership, where you continually get sucked into the going back into the restaurant itself. And talking about this, they are the international arm, but they do leverage on Hai Di Lao's strong equity branding. And not to worry, because they are under the same bosses, the share owners are the same, so you don't have a it's very unlikely that maybe they quarrel and then they decided to carve out this and forget about it. Very unlikely, because if I'm not wrong, Hai Di Lao owners are also staying in Singapore. Okay, and I mean, the businesses are growing from strength to strength. If you look at their financial results, they actually just turned profitable last quarter or last half a year. Because of COVID, they have been making losses, but then recently they turned profitable, and I do see that the trend will continue growing steadily. Okay. On top of that, the growth trajectory is very visible. They are rapidly expanding their footprint all over the world. You know, even if every country they just add on a few outlets, that will equate to a lot of growth already. So they are also well positioned for the premium dining market. They're even coming up with a brand new concept called something barbecue. Okay, so I do believe that they're not just resting on their laurels and just focus on hot pot. They're also expanding everywhere aggressively and also coming up with new concepts. So that is really a bonus for me to consider this stock itself. All right, to sum it all up, while there are countless of China stocks out there making headlines, here are my four personal favorite stocks. Now I want to hear from you. Are you also interested in these stocks? Drop a comment below and share your thoughts on them. And don't forget to tap the like button, subscribe to our channel, and ring the notification bell so you never miss another update. Thanks for watching, and until next time, happy investing.